Listen to me. I want you to hear me and hear me clearly, because this is one of the biggest, most dangerous financial mistakes I see people making as they approach retirement. You have worked 30, 40, maybe 50 years for every single dollar sitting in your 401k, your IRA, and your savings account. You've sacrificed, you've saved, and now you are looking at the finish line thinking, if I just move from New York, California, or Illinois down to Florida, Texas, or Nevada, I can keep all my money because there is no state income tax. Stop right there. I need you to take a deep breath and look at the whole truth, not just the glossy brochure. Because if you move solely to chase zero state income tax without looking at the full picture, you could be stepping right into a financial landmine that destroys the peace of mind you worked your entire life to build. Here is the fear every single pre-retiree carries: running out of money before running out of life. That fear is real. So when you hear that 9 states have zero individual income tax, your brain instantly says, that's it. That's how I stretch my nest egg. But can we be honest with each other? States need revenue to build roads, fund police, maintain parks, and run public services. If a state isn't getting revenue from your income tax, where do you think that money comes from? They get it from somewhere else. They get it through skyrocketing property taxes, higher sales taxes, local tax add-ons, and skyrocketing home insurance rates. Look at what happens in reality. Take a state like Texas or New Hampshire. Zero state income tax on your earnings or retirement withdrawals. Sounds wonderful, right? But both of those states have some of the highest effective property tax rates in the entire nation. If you buy a beautiful home in Texas, your property tax bill every single year could swallow up every penny you thought you were saving on income taxes. Or look at Florida, where property insurance rates and homeowners association fees have soared. If you save $4,000 a year in state income taxes, but your property taxes and home insurance go up by $6,000 a year, did you win? No! You lost $2,000 a year out of your retirement pocket. And what about Social Security and your retirement accounts? Right now, 42 states plus Washington, D.C. do not tax your Social Security benefits at all. You do not need to move to a zero-income tax state just to protect your Social Security. Furthermore, several states that do have an income tax completely exempt retirement account withdrawals, pensions, or offer huge deductions for seniors. Then there is the nightmare that nobody warns you about, the state tax audit trap. If you decide to pack up and move out of a high-tax state like California or New York, do you think those states just wave goodbye and let you leave with all your money? Absolutely not. If you do not legally and cleanly sever your domicile, your former state will come after you with an audit, demanding back taxes, penalties, and interest on every dollar you earned or withdrew, claiming you were still a resident. They look at where your doctors are, where your primary bank account is, where you vote, where your pets live, and how many days you spent in that home. So what is the actionable takeaway here? How do you protect yourself? First, do not let the tax tail wag the lifestyle dog. Never move anywhere purely for tax reasons. You must love the community, the weather, the access to quality healthcare, and being near your loved ones. Being miserable in a lower tax state far from your grandchildren or trusted doctors is a price no retirement check can fix. Second, calculate the total cost of living, not just the income tax rate. Sit down with a certified financial planner or tax professional and compare your current total tax burden, income tax, property tax, sales tax, fuel tax, and insurance costs against your prospective new state. Third, if you decide to move, test drive it first. Rent a home in that new state for 6 months or a year before selling your primary residence. Make sure you actually love living there in every season before committing your life savings. Fourth, if you do relocate, sever ties completely and cleanly. Get a new driver's license, register your vehicles, update your voter registration, shift your primary medical providers, update your estate planning documents to reflect the new state's laws, and keep meticulous records of the days you spend in each location. You deserve a secure, peaceful, and joyful retirement. Protect your money by getting informed, looking at the entire truth, and standing tall in your financial power.